On today's Enrique's First Time Buyer channel, we're going to answer these questions. Are rates going up or are they going to stay down? Hey, welcome back. Enrique here with First West Financial. I am a mortgage broker local right here in Southern California. Although the information I'm going to give you applies to anyone. It doesn't matter where you're watching. I don't care if you're in Alaska, you're in Hawaii, you're in the back east. This information is going to be super useful. So this is called the First Time Buyer channel because we help people answer questions about buying a home, buying their first home, or just purchasing a property, whether it's an investment home or purchasing a second home. Good information, so make sure you hit subscribe. I would appreciate that. Also, go check out the rest of our videos. We have tons of material that is very useful. So big question. You're probably watching this at a different time, but this video is being recorded at the very beginning of October. We are in the first week of October. And I get phone calls that people ask me, Enrique, are rates gonna go up? Are they gonna go down? Or are they gonna stay the same? The answer is yes. Obviously, I don't have a crystal ball. So I cannot give you with certainty a 100% answer. I got news for you. Nobody can. It doesn't matter. I am friends with some of the top financial minds in the mortgage business. I am subscribed to some of their servicers. I've had an opportunity to talk to one of them just 2 weekends ago at a convention in Las Vegas, and he doesn't know either. But he gave me some really good indicators that I'm going to share with you that are going to give you an idea of what is most likely going to happen, right? So the first thing you need to know is that rates are constantly fluctuating. They move every day. In some cases, they move during the day. They may start one place in the morning and then they change throughout the day. The reason is because the rates are tied to the bond market. When the bond market moves, chances are the rates are going to move. A lot of people think that the government sets the mortgage rates. The government doesn't do that. It is a free market. So think of it like the stock market. You know, Google, Apple stock, it's moving up and down all the time. So are the rates. The 30-year fix, the 15-year fix are very much in a free form. The market determines what happens. As a result of it, there can be a lot of stability or there can be a lot of volatility. That means that we're going to go through periods where the rates are not going to move. And then we're going to go through periods where the rates are going to go up and down. And they're going to go up and down a lot. And what we can tell you is what we know. Let's see what the indicators tell us. So the first thing you need to know also is the fact that we are coming off one of the periods in history with the lowest rates for the longest amount of time. There has been a lot of times in history when the rates get very low, but they get low for a month or two. We have been enjoying ultra low rates in the 2% range for a long time, over a year. Now that's unusual. And that's also scary because that means it's eventually going to come to an end. It always does. It's no different than the stock market. When the stock market is really, really high, it's not going to stay high forever. If it's really, really, really low, it's not going to stay low forever. The same thing with rates. So we know that eventually these rates had to come to an end. We are starting to see indicators that tell us that the rates are going to begin moving up. We don't know that 100% for sure, but the economic indicators tell us that that's going to happen. In November, the government will begin slowing down purchasing mortgage-backed securities. This is extremely important because mortgage-backed securities is the instrument that basically allows us to determine where the rates are going to be. The government has been buying billions and billions of dollars of mortgage-backed securities. They already told us they're going to slow down. They're going to continue to buy them, but they're going to slow down. When they did that last week, the rates started to move up. And little by little, we're starting to see the trend. So when I talk to all of my friends, all of the experts, all of the gurus, every single one of them tells me, Enrique, I'm not a gambling man, but if I was, and I had to bet whether the rates are going to go up or down, I would bet that the rates are going to go up. Every single one of them is betting that they're going to go up. There's a reason for it, right? So what does that mean? Are they going to get to 4%, 5%, 6%, 7%? We don't think so. We do not think that those rates are going to get to that level. We think they're going to begin moving into the 3% territory. In fact, most banks are already selling rates over 3%. We're still under 3%. But a lot of banks are already selling over 3%. And a lot of banks are telling us that that's what it's going to be like, 3, 3.5, 3.75. We don't think we're going to get to 4% anytime soon on the average 30-year rate. So I think there's still a great opportunity for a lot of you who are holding off because they think rates are going to go down. Don't wait. This is the time to purchase, refinance, buy a second home, buy an investment home, purchase a rental, whatever it is that you want to do, refinance your existing mortgage, because the rates eventually will go up. Going from a 2.5 or 2.8 to a 3.5, 3.8, it's a lot of money. It's thousands of dollars in savings. So if you let those rates creep up because you got wrong information, that's your fault. We think that this is the time to pull the trigger. I can tell you personally, I purchased a second home. I refinanced both my first and second home because I know that rates eventually will go up. I'm betting on that. I think that's going to be the case. And I think I'm going to be proven right. So if you have any questions, you want to learn more about this, there's a lot of information online, but we want you to reach out to us. Call us 760-488-6482. We'd love to give you a consultation. We would love to tell you more about what is happening with the rates, or just send us a message. We're always here. I hope you have a great week. Talk to you soon.